when the Fed says, well, we've already printed umpteen trillions of dollars over the last couple of years, and we are seeing inflation now, but the economy is so bad, we're going not only to pause, we're going to cut. I don't see that happening for a while, by the way, but at some point they probably will. And that's sort of a signal to the markets that they've given up. They've given up a tight monetary policy to defend the value, the worth, the price of the US dollar. And they're saying we're just going to let it go into the dustbin of history like all fiat currencies have.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for September 25th through October 2nd, 2023, while supplies last. This week we feature two different specials, fractional eagles and British sovereigns. We have 1 10th-ounce gold eagles at $39.99 over melt and 1 1/4-ounce gold eagles at $59.99 over melt. We also have King George British sovereigns at just $49.99 over melt. First, the gold eagle was released in 1986 and has been one of the most popular gold bullion coins in the world, providing incredible recognizability and investor trust. The 1 10th-ounce and 1 1/4-ounce eagles are additionally sought after for their high degree of flexibility and liquidity. Like the 1-ounce eagle, the 1/10 and 1 1/4-ounce eagles are 22-karat gold strengthened with copper. They're 1/10 and 1/4 of a troy ounce respectively, and come in tubes and boxes at quantity. The 1 10th-ounce gold eagle is just $39.99 over melt, and the 1/4-ounce gold eagle is just $59.99 over melt while supplies last. They're also IRA eligible. Next, the King George British Sovereign is one of the best-known historical coins around. The British Sovereign contains 0.2354 troy ounces of gold and was first minted in the 1400s. The King George Sovereigns continue this tradition between the years of 1911 to 1932 and are prized for their fractional weight and their historical merit. They are priced at $49.99 over melt with a minimum purchase of 2 sovereigns. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend David Morgan from the Morgan Report. David, thank you so much for joining us today.
Yeah, it's always good to be with you, Elijah. Thank you.
Well, it's great to have you. I did want to discuss the gold and silver markets, the Fed pause we're seeing today, and also oil markets, and lastly, the BRICS expansion that we saw last month and to take effect the beginning of next year. First, with respect to the gold and silver markets, it seems like, they're holding up pretty well, but nothing dramatic seems to be happening right now. And, a lot of people were looking for them to go higher, but they're still kind of staying steady right now.
Exactly. I mean, as I've said and many other commentators, we almost always get a summer doldrums. There's been exceptions, but there are exceptions. The seasonality is very strong in the summer months. Gold usually hits its low in August, which was close to this year. And then it's not an immediate September 1st. It starts coming back up, although generally speaking, the last quarter of the year is generally good for the gold market. I think what's going to happen is we've got this purported end of money for the U.S. government by the end of September. I haven't looked into it real deeply, but I've got it from good sources. So if this is true, there may be an emergency meeting of the Congress critters to, fund the government again, regardless of whether any of that takes place or not. I do think and have been saying for some time, and I could end up with egg on my face, which is fine, that October we would see some kind of market shift in the equity market. So if I'm right, and we see equities come down in a substantive way, then gold and silver will follow or all come down at the same time. That's because there's so much leverage in all the financial markets. Everything's basically computer programming with algorithms and AI. I mean, the Aladdin program that works for BlackRock, a lot of people don't even know about it, but it's been running the show for quite some time. So the idea is that I expect to pull back and everything. So I think the gold and silver market may just kind of be biding time until a clear direction is given. For example, I'm correct and they get pretty sharp spike down, or I'm wrong and maybe the market does better than I expect, and the gold markets and silver markets start to move it up. One thing I want to say before we move on to the next topic is what's frustrating to me is being, I'm a student of the markets my whole life, and I'm learning more. But I don't recall seeing a market like gold or any market where we're within about 10% of the all-time high, and the sentiment is so bad. If gold was down at, 1,500 or 1,600 or something like that, I could see the sentiment being where it's at, but it's not. It's basically hanging in there, as you said, and it's within striking distance of the all-time high. And yet everybody's got a long face like it's trading at very low price. I mean, both your major gold companies have a pretty good margin, and they're making money in fiat terms. And that's not true in the silver market. I mean, depending on how you figure all-in sustaining costs, we're anywhere between $22 and $25 the ounce. So most of these silver producers are not making money, or if they are, they're not making much. So, you could be glum if you're a silver investor for the right reasons, meaning, it's really not doing well relative to what the costs are. But gold's a different story. And yet, from what I see, the sentiment's low. So I just want to make that comment because, again, it's unusual to see something, but I think the reason is that it's just doing what that famous, I know it's famous, that adage that I coined so many years ago, that silver will scare you out or wear you out. It'll just go sideways in a trading range for so long, you just get bored, you give up, you sell out, or I'm never buying the silver again or whatever, because those are perfect times to accumulate if you're a long-term investor. But a lot of people in the world of investing are really not that patient. Some are, but a lot aren't. So back to you.
Going into the end of the year, do you see gold and silver up, or do you think by that time we could still see silver down if we see gold and silver down if we see a market crash?
I see them up either scenario. If we get a pullback and a good correction in the stock market, they'll come down. But then they'll be the first to rally. And if the market continues down, gold's the most negatively correlated asset to the stock market. So at some point, not day for day, tick for tick, but general trends are there, you'll see gold actually do better. I actually think we'll see a new high in gold by the end. Not anything like $200 more than its old high, but a new high. And it might get there and pull back. I don't know. It's already triple topped around that area. I think it'd go through it. And I think silver still, as much of it's been beat up this year. I think 26 something was the high in early May. But regardless, I think you could see better prices for silver as well. This time around, it looks like gold's got to take the lead before silver will come on board. Although fundamentally, silver's got every reason in the world to lead gold because there's so much demand on the electronics and solar side, and the investment demand ebbs and flows, but it can change in a heartbeat. And you can go from what you're already aware of, where the retail dealers are actually having a pretty tough time sourcing metal in a timely manner, and then of course, as I said, people are wearing them out. It's like, I don't need any more. I better sell some back or whatever. Anyway, back to you.
Well, yeah, it's interesting the dramatically different environments we can see on the retail side, like in March and April, where there were delays, high premiums, the most demand we have ever seen before. And now, more supply, lower premiums. And I think, that just kind of gives the point, it's good to buy when no one else is, right? Because then you're probably going to get the lower premiums and, your product faster. I did want to ask you about, what is going to be driving precious metal prices. I know there is concern about more inflation coming, especially with the higher oil price right now. The Fed paused, but they still seem to be hawkish at the moment. Your perspective on what the Fed is doing and other drivers of gold and silver.
Well, interest rates do drive it, but not to the extent, and I've said this on your show before, to the extent that some people are taught to believe by the economic establishment. That is that, any increase in interest rates is very detrimental to gold. That's not true. Gold goes up in an increasing interest rate environment for quite some time, and the only time interest rates really take power over gold is when you have a real rate of return. And if the real inflation rate's, say, 7%, and you're only at 5.5%, then you're actually still yielding a negative 2% or so in real terms. So until you get a real return rate, then it can have an effect on gold. But there's so much funny money out there now that even if it did get to, say, par, we got to 7% interest rates. I'm not saying we will, but if we did, you'd still be break even, which is better than losing 7%. But so it will have some effect on a knee-jerk reaction, but over time, you'll just see gold continue to march up and up and up. So again, I think it'll be higher by the end of the year. The Fed is doing everything they can, not only in real terms, meaning they are increasing interest rates, but is also the rhetoric. And you'll see them start to shift more and more, meaning that they're going to retarget. The 2% won't be the target. They'll modify it and say, well, really, under current conditions and the supply chain and the illness we had, and they'll make some excuses and they'll say, we're going to shoot for, pick a number, 3%, maybe 4%. Who knows? I mean, people as old as me know that Nixon put on wage and price controls at 4% inflation. I mean, back in the 70s, we thought 4% was such a high inflation that the government installed wage and price controls. So put that in your thought process. But things change. They're conditioned to believe that, little inflation's good and all this other nonsense you hear from the Keynesian economic model, which isn't true, but can look true for quite some time. So I'm probably off topic, but I call them as I see them. I really think that the gold markets will take off, silver as well, when they throw in the towel. When the Fed says, well, we've already printed umpteen trillions of dollars over the last couple of years, and we are seeing inflation now, but the economy is so bad, we're going not only to pause, we're going to cut. I don't see that happening for a while, by the way, but at some point they probably will. And that's sort of a signal to the markets that they've given up. They've given up a tight monetary policy to defend the value, the worth, the price of the US dollar. And they're saying, we're just going to let it go into the dustbin of history like all fiat currencies have. When, if that takes place, and I'll say more like when, it won't be instantaneous, but within 3 to 6 months, the markets will understand that they've given up. There's no hope alive that this dollar will last in its current form for much longer. And that's when you'll probably see the metals markets really, really move.
We saw the BRICS expansion in August. Your perspective on that and how it plays into the de-dollarization story.
Yeah, that's a good one. I'm going to read a few things here out of the last month's Morgan report. We talked about BRICS and covered it in a few pages. We did the month before as well, but just hitting a few high points here. Let's see. Without a doubt, President Xi from China, of course, is firing shots at the U.S. for decoupling attempts amidst an escalating trade war, which comes after years of overdependence on Chinese manufacture. A thing we covered last month's TMR, so let me do the shorthand version. There's been a bigger and bigger bifurcation between China and the United States. And we, the U.S., really depends on China more than most people know. I mean, if China stopped all shipments of everything they produced, Walmarts would be empty, for an example. Xi is not the only one feeling hard done from the U.S. sanctions, as President Putin confined to attending via virtual phone call to the last BRICS meeting in South Africa, after smugly commenting that, quote, the irreversible process of de-dollarization is gaining pace, unquote, and after citing that the BRICS New Development Bank as, quote, a credible alternative to the existing Western development institutions, Putin took aim at the West for its hypocrisy in regard to the, quote, unquote, so-called grain deal, which he explained had failed on its merit to deliver food to those who needed it most. And again, I won't read the whole thing for the Morgan Report premium service, but sensing an opportunity to take the high moral ground, Putin continued by announcing that it graciously provides 6 countries in Africa with 25,000 to 50,000 tons of grain, each with free delivery, before providing a mic drop moment in which he referred to the West's attempts to pressure unipolar order as a, quote, modern day colonialism under the guise of benign martyrs of human rights, end quote. So Putin's really calling out the U.S. administration for talking out of both sides of their mouth, trying to make things sound benevolent and good and caring and loving and, all that, when in reality, it's anything but. And I don't care where you stand on the Russia, Ukraine, what side you're on. Hopefully you're neutral. But regardless, you got to look at all and then use discernment. It's sort of the Bruce Lee method. Look at everything. You can learn a lot of things you don't want to do, but you can also pick up things that you do and incorporate them for you yourself. And that's, the way I look at the geopolitical world. Is pretty hard to navigate through because almost everything you hear on either side is propaganda only. You really don't get much truth. As I put in that article I wrote in the Morning Report right after the war started with Ukraine, and I said that, an old adage, it's not me saying it, but one of the first things that you lose in war is the truth. Let's see. Lastly, to wrap it up, let's see. The bottom line is that the BRICS Plus are in the ascent while the West is in decline, a theme that stems from our friend Mike Maloney, who reminds us poignantly that throughout history, empires fall and new ones are born. That's what the Four Horsemen film is all about. With this in mind, the chaos and confusion transmitted from this transition will have a multipolar world, period, which will likely result in central banks reverting to a sound money system, possibly a theory that record-breaking central banks gold purchasing activity supports. In other words, central banks have been buying gold at a record rate last year, continue to buy at a rapid rate again this year. And I have a slightly different take that gold is the money of last resort, but it's also the last thing on the table in my view. I don't think the new system will come out and say we're gold backing the new one world currency or the dollar or however it goes. I don't think that will happen. I think they'll put up something else and try to fool the public one more time. And if that doesn't work, then they'll probably bring out the gold card.
There was a lot of anticipation about a gold-backed BRICS currency being announced. Russia Today, the government-run news channel in Russia, said that they were going to announce it in the BRICS meeting, but they didn't. What it sounds like you're saying is that it'll be kind of the solution of last resort once everything else is tried.
That's what I've said for a long time, and I really wasn't the first one to say it. I believe Jim Sinclair was. And the more I thought about it, the more I agreed with him, because after studying what Mark Carney said when he was working in the Bank of England before he left, and gave the same speech in 3 places, and it all basically said they wanted a modern money theory, which means unlimited printing, no backing whatsoever, and they wanted complete control. They wanted to eliminate paper currency altogether. So they wanted a cashless system controlled by the banks only, and everything you did was trace and tracked and taxed by them, the central bankers, and no backing. So that's what they want. And as I've said before, and it bears repeating every time, and that is that it doesn't necessarily mean that's what will take place, but it is probably what will be their first proposal. And if they can get away with it, they'll probably do it. If they can't get away with it again, they'll probably have to come back and make some kind of bridge to gold or, some backing. The problem with backing it with gold is it's the old system that, the gold standard never works. And it's not because the gold standard doesn't. It works wonderfully well if it's adhered to. It's just that, is there, really the gold in the vault, and is it really backed and all that? And that's why, of course, the U.S. shut the gold window in August 15th, 1971, because we lied. The U.S. printed more receipts for gold than there was gold to collect. And France and the U.K. called them out on it. So they had to close the gold window. Could that happen again with the blockchain and the smart contracts and all that? There's a lot of arguments of no, it wouldn't, couldn't, shouldn't happen, but I'm not so sure. When a human element is involved, a lot of funny things can take.
Yeah, so I guess it's just kind of a note then, don't wait for some gold currency or some currency to come out that is as good as gold. Why not just hold gold itself and silver itself, real money?
Yeah, put yourself on the gold standard. Put yourself on the silver standard. That's really the best way, because if things do not go as the bankers expect them to go, and there is, let's say, a chaotic period where the banks are closed or the financial markets freeze up, or there's a electrical problem, or who knows, in today's complex society, there are many points of failure, then going to barter wouldn't be something that everyone would want to do, but it's something that if you had the ability to do because you had gold or silver, that'd be one of the primary barter items available. So you'd be in a lot better shape than people that didn't. And again, it may never come to that, but nonetheless, it's chance favors the prepared mind. If you're prepared for the worst case scenario, then you've got it covered.
All right. Well, David, we really appreciate your time today. If our viewers are interested in learning more, where can they find you?
The best place is our main landing page, themorganreport.com. Just get on our free service. I'm going to be doing a special for the premium service. I haven't put it out yet, but I'll tell you, I'll be making a video on it. Anyone that's a previous member, we're going to give them a 1-hour consultation, which basically is the cost of the service itself, one-on-one, just to make sure they get set up the way they want to, regardless of what their questions are. It could be on the equities, could be on any of the markets. And then I'll do the same thing for new members, probably on a half-hour basis. In other words, you get a half hour directly with me, not one of my staff, and get you started right with the premium service. So that's the plan from now to the end of the year. And thank you for having me on your show. Any
last thoughts before we let you go?
Yeah, I think that it's going to be very, very interesting times ahead. I've overused the word, but we're getting very close. Like I said, we theoretically run out of money in the U.S. government at the end of September. There's more and more things happening all the time. The news flow is just unbelievably quickening these days. And I think the main thing is to keep a strong faith, know what's real and what isn't. Don't buy into the propaganda. Think for yourself. Use some logic and realize that the human population has faced things far worse than what we are facing. X may be another illness situation that's really bad. I don't know, but basically the human spirit comes through almost anything. So bear that in mind, and you don't have to buy into all the lies that are out there. Try to focus more positively and maybe get less news instead of more.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.